Let's get in Sacchitanand Uttekar, who joins us on the show. Hi, Sachi. Well, it seems there is some buying at lower levels. We went to around 17,350, and from there we have bounced a little bit. Would you be a buyer at current levels, or do you believe you're going to go ahead and test the lows that we saw earlier this week?
Good morning, Nigel. Nigel, clearly, I think the support at around 17,350 may not be violated. In fact, if you look at the Nifty data, the range is, been exhibited within 17,350 on the lower side and 17,450 on the higher side. We are expecting the expiry to shape up again above 17,400 itself. When it comes to BankNifty, I don't think we may slip below the previous day swing low, which was around 40,340. So probably the oscillating range could be somewhere close to 40,500 to 40,900. Even here, we are expecting a recovery, and probably the expiry could shape up somewhere close to 40,650, 700 itself. So both the indices, I think we have already seen some sharp cuts, but I think if you look at the equation here, it looks rather stable than than further weakening. So probably in the second half, we may see a good strong recovery coming back in the market. When it comes to Nifty, I think the pressure is clearly evident from the IT stocks. But when it comes to BankNifty, I think certain long positions can be deployed here. So from a trading perspective, the stop loss should be kept somewhere close to 40,360 on the lower side, and some long positions can be built in here. Overall, we are expecting a move towards 40,900 eventually during the day.
All right. Expect a recovery in the second half, and 40,900 on the Nifty Bank is what you're expecting in terms of a move, and that would also coincide with the 20-day moving average there. Sachi, individual stocks, how would you play that? Do you have any thoughts particularly on the Adani Group?
Good morning, Mangalam. Mangalam, I think it's better to avoid that particular group. There are a lot of other pockets which are still relatively stable when it comes to trading. We are focused on certain pockets wherein there was inherent weakness and some sideways consolidation was evident in the last couple of trading sessions. So right now we are looking at stocks which are showing or displaying relative strength in the last few trading sessions and which are positioned for a strong recovery. So the first stock that has hit our radar is Heromotoco. If you look at the entire data set, we saw a very sharp decline of almost 400 points from the recent swing highs. If you look at last two trading sessions, we saw a gravestone doji kind of formation right at the bottom. That particular bottom is still not been violated. And if you look at the OI additions today, which have been on the positive side, it has managed to sustain above its 5-day exponential moving average, and good positive crossover on the RSI is compelling us to build some long positions here. So the stop loss should be placed at around 2420 on the lower side. We're expecting a good strong pullback towards 2560 eventually. The second stock on our radar, which we have recommended to our clients, is Indigo. Now again here we have seen a severe decline, but for the past 4 trading sessions, the stock has displayed a good relative strength. It has been oscillating and consolidating within a narrow range. We are expecting that this particular range to widen up and probably give a breakout on the higher side. The short covering move can take this particular counter towards 1960. So long positions are recommended here with a stop loss at 1855.
Okay, all right, Sachi, thanks so much for stopping by and giving us your call on the index as well as the individual stock.